Hello, welcome to alphatrends.blogspot.com. My name's Brian Shannon. If you're viewing this blog somewhere else on the web, on Google or one of the other video hosting places, please do make sure you take a look at my blog. I've got a lot of other information there. What we're going to do today in this video is not look at stocks, but look at the overall market. I've been on vacation for the last week, so I haven't had the opportunity to update any videos, but I'm back now, so I think we should begin with a look at the market first. So let's go ahead and start with the Qs. The Qs, and first of all, I want to mention that these charts are brought to you by Realtick. Check out www.realtick.com. In my opinion, they're the best trading platform out there, the one that I use each day. But these charts are really very good as well. And what we're going to do is first look at the Qs. I first became concerned with the Qs, not actually last week when they broke this, 2 weeks ago when they broke the trend line, but when the Dow was making all-time highs. That was the news that everyone was talking about. Kept pointing out the fact that the Qs were in this downtrend, represented by the lower highs and lower lows that I had just drawn in. Now, it also represented this trend line. This was the day right here that the Fed last raised interest rates on this particular day. The next day was the day, that Thursday, that brought us down through that trend line, and that's where the real selling began. Now, a couple green candles does not mean it's good time to buy. Obviously, we can see the trend is still lower, and what I've been focusing on this past week is the 10-minute time frame. And what I showed on the 10-minute time frame was this longer term moving average. Now, what I have on here are 5 different moving averages, actually. The orange one is a 5-day moving average. This green one up here is a 10-day moving average. But this thinner green moving average is a 100-period moving average. And a lot of times the market needs to see that moving average flatten out before it can potentially turn higher. What we had recently was the 20-period moving average crossing up through the 50-period moving average. Now, what that tells me is the market is trying to stabilize a little bit in here. It's not time to buy yet. And really, I was a little bit concerned about Friday's bounce. Friday, the market did bounce, but after a severe drop-off, as we saw, such a sudden and quick sell-off, any subsequent rally you would expect to be a sharp snapback rally. We didn't get that, so it tells me that we're probably not out of the woods yet in the market. And we'll look again at the daily chart shortly, but the point I want to make here is right now the most pressing area of potential resistance and what's been resistance in the near term is about 39.55 or so. We're not going to get exact with those numbers, but that's also where we see the declining 5-day moving average. So I think maybe this week we can see a little bit of more stabilization in here. What I do like to see once I get rid of this little trend line, the trend line I drew, is that the market looks like it might have made a higher low on this time frame. Now, don't get that confused with this time frame, because the daily trend is in a horrible decline, which is telling us be extremely careful until this gets resolved. And there's a big fundamental shift in the market, the way people are thinking about interest rates right now. But it's made a higher low. Let's see if that can match that Monday or Tuesday, get above that rising 5-day moving average, and perhaps we could get a tradable bounce. I don't think it's going to be much of a bounce, but maybe up towards that the 10-day moving average, which is where we also have a prior level of consolidation. So maybe around 40.40, 40.50, somewhere in there, $40.50. If we look at the daily chart, though, again, this is just a busted market. There's nothing to like about it. We're going to probably see if the market bounces up towards that $40.40 level, $40.50 level, which is a nice dollar away for you Q traders, that this prior level of support that we saw late in December and then again in early February and early March is most likely going to act as a potential source of resistance. So support broken tends to act as resistance. We could see a more severe bounce, probably not the best choice of word, but we could probably see a better rally, maybe up towards 41. But the bottom line is the market's in trouble. A lot of big money moving out of this market right now, thanks to changing views on interest rates, basically, and that's where we are. So the S&P, the Qs, the Nasdaq 100 continues to act terrible. It's very concerning that the bounce didn't materialize into something bigger. I would have expected more of a rally, but we didn't get it. So we work with what we've got, not with what we want to see happen. The S&P, same thing here. We've got this little trend line. So that little trend line is also going to coincide, the downtrend line that is, with about that resistance up around this level here at about 127.60 or so. The market did make this first higher low, so I think taking out Friday's high might potentially lead us to a rally, perhaps up to 130 or so. But here's another busted market. 130 would be very aggressive actually when I'm looking at it now. But that's a potential scenario. More likely the 129 level where we had the gap, that level down where the market gapped down. So we could come up with all kinds of potential scenarios. Bottom line is, the stochastics are oversold, the MACD's oversold, all that stuff. We can draw on retracements for where we think the market's going to go. But the bottom line is the market's going to tell us. And the only way that we're really going to know where any potential bounce, if we get it above that level, where it's going to stall out, we're going to know it by looking at shorter and shorter time frames, by looking at a 5-minute time frame, by looking at a 2-minute time frame and looking for evidence in there. We're not going to get into that right now. Something I'd also mentioned in last Saturday, the 13th video, was the big volume that we had seen in gold and how that was kind of concerning to me right in here on this big volume. Big volume without further upside progress tends to act as distribution, or stage 3. Now, I don't think by any means that the rally in gold is over. We've got a huge bull market in gold, although we did see a phenomenal rally from 52 up to 72, or these are the GLD, the ETF for gold. But I think we could probably see continued pullback, maybe towards that 50-day moving average, which really hasn't been tested on this pullback yet. So about 61.50, 62 or so. Something I saw that was kind of interesting this week, why did the market sell off? Well, because Bernanke said that, hey, we're most likely not done. And that raised concerns about higher interest rates. Well, the interest rates actually sold off this week, which was interesting, that we saw weakness in interest rates, meaning that people were buying bonds this week. They buy bonds, yields go down. They sell bonds, yields go up, the inverse relationship. Point here is that just like GLD, this 10-year yield is still in a phenomenal uptrend. That 50-day moving average has not been tested. A lot of times that is a potential area where there's support. It's right now at 49.53, so maybe yields are going to come down towards that level, and if that's the case, perhaps that will be the stimulus for a bounce, or what people assign as the reason for a bounce. I'm going to get off real tick here for a moment and take a look at another chart service out there, stockcharts.com. Excellent service. It's a free service, so check that out. $WTIC is the symbol that they use for their continuous light crude oil contract. And you can see here that oil has come down not only to, I had been pointing out previously, this cup and handle. I'm not going to draw it in because I don't have the same drawing tool, but if you can follow my mouse, you can see that this represents the cup, this representing the handle. The market broke past that level of resistance at about 69.50. It started to rally up, and now it's been chopping around between this $70 to $75 level. Well, what we have right now is still a great uptrend, but just some consolidation where it's above the rising 50-day moving average where support is often found. So that's a potential reason we might find support. And this prior resistance might act as support. Bottom line is there's still a lot of risk in this market right now. Later on tomorrow, I'm going to come back at you with another video. We're going to take a look at some specific stocks. We're going to come up with a plan of action for Monday. And I hope that you've enjoyed this video. Send me your feedback, alphatrends@gmail.com. Again, my name is Brian Shannon, and thank you for your time. Have a great week trading next week, but be sure to visit again tomorrow where we will take a look at some specific stocks. Thanks for your time.